Great. Thanks, folks, at Economic Times. Good afternoon, everyone, and welcome again. This is the second of our three webinars in this series. The first one was a couple of weeks back on impact of Reliance Jio and potential pricing and packaging strategies for operators. This one, as our Economic Times colleague said, is around the upcoming auction with a focus on 700 megahertz valuation. With me presenting this webinar are Gupta, who's an engagement manager, as well as Bharat Sachdev, who is a senior consultant with our practice. Quick introduction, folks. Spectrum strategy and spectrum valuation is something that is one of the sweet spots of the firm, in addition to all of our other strategy and operations work. By means of context, I think over the last 3 years, there hasn't been one global auction worldwide that we haven't been part of, that the firm hasn't been part of in terms of supporting one or another operator with the winning bid. In India, we've done the last couple of auctions with various operators. Today here, we're really going to discuss a general introduction, a context-setting introduction to the auction, both from demand and supply side, but then also we have for you two sample valuations, one for a pan-India operator and a second for a smaller regional Indian operator. So these are obviously illustrative sample results, so we request you to view it as such. So without further ado, moving on to the next slide. So as I said, the agenda for today, we'll start out by discussing what's happening in the market, what the drivers of the upcoming auction could be, what's available from the supply side in terms of spectrum, and what might be the demand from various operators. So we'll start out with the qualitative contextual section. We'll then get into an illustrative 700 megahertz valuation for a Western Indian circle for a large pan-India Indian incumbent. That will be followed by an illustrative 700 megahertz valuation and overall spectrum strategy for a regional operator for a northern circle within India, and then finally wrap it up with some views on what the potential spectrum strategy for a new entrant might be in the upcoming auction. Okay, so starting out, what's really happened in the Indian market over the last year, 2 years is that it's really come to an inflection point, whether be it from a demand side or a supply side or a regulatory and technology side. So from a demand side, for example, the data market has really started picking up, and that's basically driven by device prices of 3G and now 4G phones really declining sharply. From a supply side, operators have sped up the rollout of their 3G and now 4G networks. As well as what's happened is that there is significant consolidation that's impending in the market. So we've obviously heard about one of the deals that's currently in progress, specifically the Aircel-Arcom deal. There's also news of a potential second deal happening between two smaller operators. So really, in that sense, the incumbents would get challenged by stronger competitors emerging in the market, as well as new entrants will face a stronger competitive intensity, less competitive intensity, but stronger competitors within that competitive intensity. And then from the regulatory and technology sides, on the regulatory front, trading and sharing has become allowed now. And from the technology front, carrier aggregation has really grown leaps and bounds. So really, in that sense, market is at an inflection from a demand, supply, and regulatory and technology perspective. And operators really need to do their in-depth analysis to set up accurate and well thought out long-term circle level spectrum strategies. Okay, so what are the options really available to various operators to try and develop spectrum strategies? Or what are the basic scenarios that they could evaluate? Three primary scenarios for the most part. One is to acquire additional spectrum to the auction. Two is to trade in spectrum from other operators. Three is to obviously share spectrum with other similar operators. There is a fourth option available, probably more so for smaller operators, which is to potentially shut down in certain circles and redeploy CapEx to higher priority circles. So really, these are the 3 or 4 options or scenarios that really need to be analyzed in depth to come up with long-term spectrum strategy, including valuing the bands that are coming up for auction in the upcoming auction. Okay, so then from the supply side, let's see what's coming up for auction. What we see on this slide is that though a lot of bands are coming up for auction, primarily it's the 2100 megahertz 3G band, which could become technology agnostic and be used for 4G, as well as the 700 megahertz 4G band, where the bulk of supply is going to come up. And the bulk of demand may or may not lie. So probably those are the two bands that require the most analysis. 2300 could get some traction because of carrier aggregation standards coming up along the way as well. But for the most part, we'll focus on the 2100 and most importantly the 700 megahertz band. What could be the strategies on the 2100 megahertz band? Samir, if you want to quickly present qualitative perspective on operator strategies on 2100 and 700 bands over the next two slides, and then we'll obviously get into more detailed quantitative valuation for 700.
Sure. So if you look at the potential strategy for operators with respect to 2100 megahertz spectrum, this slide basically analyzes what is the current spectrum holding of operators by different bands and in different circles, and we try to correlate it with their existing revenue market share. So boxes highlighted in green color shows high RMS of more than 20% of an operator in a particular circle. So, for example, if you look at Bharti Airtel, it has 3G spectrum in almost all its high RMS circles, except maybe in Kerala and Punjab. Now, Punjab has some interference issues with 2100 megahertz, so the only circle that's left for Bharti Airtel is Kerala. So, in terms of their potential strategy, they could look to acquire 2100 megahertz spectrum in Kerala circle to complete their pan-India footprint of 3G network. Also, they could potentially acquire a second carrier of 2100 megahertz in high demand circles like Delhi and Metro. The reason for that is, with high traffic demand, operators would need to deploy more with only single carrier of 2100 megahertz. Operators will need to deploy more.
Could you please put the PPT in full screen mode?
Sorry?
Full screen mode, okay.
Okay, thank you.
Is it fine? Okay.
Yeah, absolutely fine.
Yeah. So, apart from completing their pan-India footprint, operators could look to acquire additional 2100 megahertz spectrum in Delhi and Bombay. Similarly, if you look at other incumbent operators like Vodafone and Idea, their strategy would also be similar. So, for example, in case of Vodafone, they could look to acquire. Vodafone already has 2100 megahertz in its all the green color boxes, like where it has more than 20% RMS, but they don't have 3G spectrum in large circles like AP, which is a category A circle and could have like significant demand in the short term, as well as in category C, large category C circle like Bihar and Odisha, which could potentially be a good target market for 3G in the long term. So, in summary, operators would mainly be looking to complete their 3G footprint or add another carrier in high demand areas like Delhi and Bombay.
Right. And just to add, Samir, I think what will also be interesting is that one of the scenarios that we've often evaluated, and in certain markets, in certain circles in India as well, have found to be value accretive, is to try and evaluate DC HSPA plus as a potential option versus acquiring expensive LTE spectrum. So that's something that's definitely on the table and could become relevant for certain operators in certain circles as well. Okay, moving on to a qualitative view on potential strategies for 700 acquisition. Samir, if you want to...
So similarly, if you look at the 4G spectrum holding of different operators in different circles. So for example, let's take the example of Bharti Airtel. Bharti has at least some amount of 4G spectrum, either 1800 megahertz band or in 2300 megahertz band, in almost every circle except 4-5 circles like Gujarat, UP East, UP West, West Bengal, Assam, and J&K. So in terms of potential strategy for Bharti Airtel, they could look to acquire 4G spectrum in those circles. Similarly, in case of Vodafone and Idea, they could look to acquire 700 megahertz spectrum in places like Maharashtra, Tamil Nadu, and Haryana for Vodafone, as well as AP, Maharashtra, Kerala, and MP for Idea.
If I may just interject as well. So, yeah, folks, I think what's important to note is that one, look at existing spectrum holdings of operators. If they don't have 4G there, and then if the price of upcoming 4G spectrum, which we'll obviously touch upon in depth, is value accretive, then they could acquire it there. But for certain operators, for example, an incumbent in Maharashtra, even if it has 1800 megahertz holding, probably 700 coming in as a coverage layer, even at the high reserve price, could be significantly value accretive. So it's not as if we can blindly say that the reserve price of 700 is too high and it wouldn't be value accretive for certain operators in certain circles. A detailed business case tells us that even if they have other spectrum such as 1800 spectrum or 2300 spectrum, to get 700 in as a coverage layer could be very value accretive even at current reserve price or higher than reserve price. And we'll obviously go through that in detail when we do the business cases. Also, what's important to note is what the competitive intensity is in those circles, as well as what the forecasted data growth in those circles might be. So just certain factors that all kind of play in determining the business case at an operator at a circle level. Okay.
Yeah.
So moving on, within the introductory section, what we also did was to, at a very high level, compare benchmarks of 700 megahertz pricing. So we saw on the previous slide that in certain circles, qualitatively, it might make sense for operators to look at acquiring 700. But let's look at how 700 is priced on a $per megahertz per pop GDP PPP basis. So this is basically a very quick and dirty analysis that we always do. We have an extensive proprietary database called the auction tracker that we use to give us a sense of the reserve prices being high or low in the market. Now, if you look at this chart, the light blue are obviously the reserve prices for various circles in India. The dark blue are benchmarks on a GDP PPP normalized basis for auctions that have happened in developed countries for 700 megahertz band in the recent past. If you look at the comparison, what we clearly see is that in most circles, including the Metro, Cat A and Cat B circles, the $per megahertz per pop reserve price basis, GDP PPP basis for Indian circles, what the Indian regulator has come up with, is much higher than what the auction closed at. So the reserve price in Indian circles, which will be the starting prices, is itself much higher than what the auction closed at in developed markets such as Taiwan, New Zealand, US, etc. So really in that sense, for probably 50% of the circles, reserve price does seem high in that sense. For some of the other circles such as Rajasthan, Bihar, West Bengal, etc., the reserve price does not seem that high when you compare to international benchmarks. So I don't think it's a standardized one-size-fits-all story where we say reserve price is high in all 22 circles. Not true. In key circles it is high, but on a simple benchmarking basis, in some of the other circles such as Bihar, it's probably still very lucrative, and data growth is really going to come up in circles like Bihar. So that's a quick analysis here. The next thing we do is we compare 700's reserve price in India to the closing price that 850 went at, or the reserve price that 850 is at. Now remember, both 700 and 850 are the sub 1 gigahertz LTE band options. What we do see is that in almost all circles, 700 reserve price is much higher than 850 reserve price or previous closing price. Now there could be reasons for why 700 is priced higher than 850 in India. Reasons such as the fact that 700 has pan-India availability across all 22 circles. Potentially will have a stronger device ecosystem in the future because there are not that many countries that are going to back the 850X CDMA band for LTE. And note, 850 CDMA band for LTE is different from the 800 LTE band that is used in a lot of European countries. Other reasons also include that 700 has more future-proofing in terms of 5G as well as potential greater global acceptance. So really, what we saw on the previous slide and this slide makes us believe that yes, true, 700 reserve price is on the higher side. But what I would mention here is that it's not a one-size-fits-all story, and detailed circle level, operator level business case analysis will need to be done to get a sense of whether 700 could be value accretive even at these reserve prices. From a business case perspective, based on our previous work, what we've seen is that the 700 LTE band does offer significant revenue upside in terms of market share gains because of better propagation characteristics and indoor building coverage, as well as significant OPEX and CAPEX reduction as compared to other LTE bands. The chart here, Samir and Bharat, if you want to quickly comment on it, just shows certain benchmarks that we've collected over the course of 50 odd auctions that we've done in the last couple of years to show what kind of revenue and market share upside as well as OPEX and CAPEX savings could 700 band deliver for operators and is delivering for operators worldwide as compared to other LTE bands. Interestingly enough, basis previous work, including some work in in the Indian context, what we see on the next slide is that even at high reserve price, so the chart on the left basically tries to whether there will be a positive value creation or positive business case for certain Indian operators in certain Indian circles to that operator's RMS in that circle. What we clearly see here, folks, is that there's a very strong correlation to an operator having greater than 10% RMS in that circle and that operator having a value accretive business case for acquiring 700 in India in that circle, even at existing reserve prices. So that basically kind of hints us towards the fact that if an operator is sitting at about 15-20% RMS, has a good quality of subscribers there, a good postpaid prepaid mix, potentially has a 3G layer to try and up-migrate and then provide a glide path to 4G. The high likelihood that even at these high reserve prices, on a detailed business case perspective, there will be a viable business case for that operator to acquire 700 megahertz. So really that is a little counterintuitive to what one's been hearing. In summary, what we're saying is that 700 megahertz pricing is high in India, no doubt, as we saw based on the benchmarks, but there still will be business cases for a lot of operators in a lot of circles for 700 acquisition. And we'll obviously see that when we do the sample detailed business cases. Then we have a couple of slides on certain other options that operators could assess as part of developing a full-fledged long-term spectrum strategy. This slide is basically on spectrum trading and represents a recent deal. Won't discuss or get too much into it just because the focus of this webinar is the 700 auction. And the final slide in this introductory section is on spectrum sharing, and then share some illustrative work around whether spectrum sharing could be value accretive or not. Okay, with that, let's move on to the next couple of sections and let's do some illustrative but detailed and almost real 700 megahertz valuations, first for a sample pan-Indian incumbent operator in a Western Indian circle, and second for a smaller regional operator in a northern circle. So let's start with the 700 megahertz valuation for the pan-Indian incumbent operator in the Western India circle. Just to touch upon our methodology for spectrum valuation, we typically use a pretty quantitative approach which has been tried and tested over 250 auctions worldwide. We try calculating the value of spectrum as the additive sum of commercial, technical and strategic value. Commercial value will basically be defined as the value that spectrum gets in terms of entering a new market or gaining additional market share within an existing market. So basically the revenue upside that the spectrum acquisition gets to an operator. Technical values, obviously OPEX and CAPEX reduction. For example, 700, because of its better propagation characteristics, will require less site deployment as compared to a 2300 or 1800 LTE play, hence would lead to lower CAPEX and lower OPEX. And strategic value really comes from trying to prevent a competitor from gaining access to that similar spectrum. So it's kind of a downside prevention value. So the value of any spectrum band for an operator is the additive value of commercial, technical and strategic value for that operator in a particular circle. And we typically build a with and without case for the operator in that circle for that specific spectrum. The difference between with and without, which is the additive sum of commercial, technical, and strategic value, is the maximum value that the operator should be willing to pay for acquiring that spectrum in that circle. The next slide basically touches upon our enterprise value calculations. It's basically a pretty detailed DCF model, which is built bottoms up for that operator in that circle. Sameer, if you want to touch upon this a little
sure.
in detail.
So basically, first we start with developing a market context where we try to forecast this growth in SIMs by technology, and that everything is done on a circle basis. So first further we benchmark it and triangulate it with different using regression with different parameters, and try to get a long-term view of technology evolutions like 2G, 3G, 4G subscriber growth in India, right? Then we try to do a competitive analysis where we try to evaluate the operator's current market positioning as well as future
market share that the operator would get.
Yeah, right. Future market share that they would get in terms of both subscriber market share as well as revenue market share. So once we forecast the total revenue for our operator in a particular scenario, then we try to build a proper P&L, which includes calculating all the OPEX items and estimating investments required to deploy the network and support that kind of subscriber and revenue growth. And then we follow
standard DCF model, right, which gets us to free cash flow. There's a terminal value for spectrum, which gets us to enterprise value in the with and without scenario. Now, obviously, the value for spectrum, as I mentioned, will be additively calculated from commercial, technical, and strategic value. Then, as I mentioned earlier, we set up scenarios and see what scenario will be most value creative for the operator, and then make our recommendations around spectrum acquisition strategy accordingly. So with that, without further ado, Sameer, let me pass it to Sameer and Bharat. Let's get into an illustrative valuation that we've done for a pan-Indian incumbent, completely outside in, to analyze whether spectrum acquisition of 700 megahertz in a Western Indian circle will be value creative for it or not. So let's start by setting out the context. As I mentioned, for this sample incumbent, with the consolidation that's happening in the market, it comes out as a significant threat, and hence coming out with a critical and well thought out spectrum strategy for a key Western Indian circle will be extremely important. So as Sameer was mentioning, we start out by forecasting the market in that circle. Sameer, if you want to take us through the full valuation.
So for example, if you look at the first and on the left and chart at the left, 2G, which currently contributes to about 70–80% of the total subscriber base, is expected to go down further to about 10% or 10–12% in the long term. So the whole 90% of the market will be contributed by 3G and 4G network, primarily by 4G network. Then once we estimate the total SIMs by technology, we get into operators' revenue forecast, and so the line on the bottom represents revenue forecast for the operator if they do not acquire a 700 megahertz spectrum, and the upper line is basically if they are able to acquire 700 megahertz spectrum. So the upside that they get with the 700 megahertz spectrum, as Rohan mentioned earlier, is driven by both two factors. One is they'll be able to get higher market share, which is higher market share of subscribers, which is further driven by better in-building coverage and characteristics of 700 megahertz. In addition, the second factor for this upside is basically upside in the data usage per sub. So with the possibility of carrier aggregation between 700 megahertz and other LTE bands, operators will be able to offer better throughputs, which will drive data usage data consumption on per subscriber level. So all these two factors will combine and provide up to 30% of revenue upside for an incumbent operator in the long term. And then basically doing all the DCF modeling, we come up with the enterprise value of the operator in the without 700 megahertz case, which is a bar on the left hand side, and EV with 700 megahertz spectrum, which is a bar on the right hand side. So if you look at the difference between two, so the total value accretion that 700 megahertz provides is about 993 billion, which is roughly around 9,300 crores. Now this is the total value, total upside that the operator will get. If we compare this upside with the spectrum cost that operators will need to pay, which is about 6,300 crores in this circle. So there's still a significant upside for operator even after paying such a high price for the 700 megahertz spectrum.
So really, folks, what we're trying to drive here is that reserve prices are high, but just as we saw from this sample case that we've done in quite a lot of detail, even despite high reserve prices, there is value accretion to be made out of acquiring 700 megahertz. So as this case clearly shows that even if this operator paid almost 1.5x of reserve price in this circle, even then there would be value accretion for this operator, and acquiring 700 will be value additive to the operator over the course of the license period. So that's basically one of the sample cases. If we move on now to a sample case and potential spectrum strategy for a smaller regional Indian operator. So we basically really wanted to do two sample cases, one for a larger pan-India Indian incumbent, another for a smaller regional operator who's operating across 7 to 8 circles. So really, what are the options available for this smaller regional operator? As laid out on this slide, 4 specific options with regards to a spectrum strategy. One, use its current spectrum and potentially do a narrowband LTE out of it, assuming it has 1800 spectrum. 2, potentially share spectrum with another smaller operator who has spectrum in the same band and do a data play around that. 3, trade in spectrum by means of an M&A that this operator seems to be already evaluating. And 4, acquire additional spectrum through the auction for a 4G play. Specifically, we evaluated the potential of acquiring 700 megahertz for this operator. Now, this is the UP East circle that we've kind of analyzed as a sample case for this regional operator. So out of these 4 options, let's go to the 4th one first, because really that's probably most relevant given the 700 background for this webinar. And if we go to the 4th option first, really all the details around the modeling are on the slides that follow. We see that unfortunately for this smaller operator in UP East, acquiring 700 at the reserve price that 700 comes at does not make sense. So acquiring 700 at the reserve price actually leads to value dilution of INR 2 billion. So it really goes back to the point we were trying to make, that it's not a one-size-fits-all strategy. For specific operators in specific circles, depending on what their current spectrum holding is, depending on what their postpaid, prepaid split is, depending on what segments of customers they are serving, depending on, most importantly, what their RMS is, 700 might or might not be value creative, and might or might not make sense for them to acquire 700 in those circles despite the high reserve price. So for the large operator we saw in Maharashtra, it made absolute sense even at 1.5x reserve price. For the small regional operator in the UP sample circle, unfortunately it does not make sense and is highly value diluted. But then for a smaller operator such as the one that we are analyzing here from a sample perspective, in UP East, what are the other options that it could do? Not acquiring 700, that's fine, but there are other options as shown on the slide that we are on. So really, let's go through those 3 options, and Samir, if you want to run us through those 3 options, and clearly show that even for a small regional operator, there's a very clear way forward in terms of spectrum strategy to choose one of those 3 remaining options and then make an absolute data play despite its comparatively weaker RMS position. So Samir, if you start with analyzing the narrowband LTE option and then get into sharing and trading.
Sure. So the first option is basically using its own current spectrum holding and taking best out of it and use and launch narrowband LTE using 1.4 megahertz of 800 spectrum. what we look at in this scenario is there will be some upside in the revenue because they will be able to target 4G markets with this narrowband LTE. So there will be a net value accretion of around 260 crores for the operator. So the difference between the narrowband LTE and full-band LTE is that the throughputs are not as comparable to full-band LTE. So that is why data usage will be less for narrowband LTE. Also, the uptake will be less.
So market share gains will be lesser compared to full-band LTE, as well as data usage will be less. So net, there would be some upside because it will allow this operator to add a data layer to its existing products. And the other thing is that it doesn't need to pay anything for acquiring additional spectrum. So net will be value accretive, but a value accretion of just about 260 crores, which is relatively marginal. Yeah. And of course, the value accretion needs to be compared to other scenarios and other cases to figure out what's the best case to go after and what's the best case to pursue in terms of a spectrum strategy. So 260 crore, which is a marginal value accretion in the narrowband LTE case. Then let's get into the spectrum sharing case. This is a sample sharing case between two small operators in that circle. What we clearly see here is that the value accretion is much larger in the sharing case. The value accretion being about 390 crores compared to the 260 crores that we saw in the narrowband LTE case. Here the operator gets to do full band LTE. However, it needs to share the spectrum and the market with another operator and allows entry into LTE for another operator that it shares spectrum with, which without the sharing arrangement, being able to enter the won't happen. So in that sense, upside of sharing, it allows this operator to do full band LTE. Downside, because it does full band LTE by sharing it with another operator, it also allows an additional competitor to come into the 4G market. Net value accretion of 390 crores, which is higher compared to the narrowband LTE scenario. Which leads us into the third scenario that we analyze, which is basically for this operator to trade in spectrum, potentially by means of an M&A route, which is being discussed, from another small operator. And what we see here is that this trading in option has the highest value accretion of 410 crores compared to the 390 or the 260 crore value accretion that we saw. And this is because, number one, it gets full benefit of a full band LTE. Two, it is able to keep an additional competitor out because it is buying out that competitor's 4G spectrum rather than sharing it and allowing it 4G access as well. Downside is obviously that it has to pay for that spectrum, but despite paying market rates for that spectrum, this option, the option of trading in spectrum potentially by means of an M&A route and UPEs, presents the best value accretion of 410 crores. So really, what we conclude that for a smaller operator, the options would be different, and the recommended path might be different as compared to a larger operator in a circle where it has high RMS. This slide basically just compares all four scenarios for this smaller operator, and as we said, an M&A route to get in spectrum from an existing operator rather than buy spectrum from the market is the best recommended route forward for this operator in UP circle. And with that, folks, we will really wrap up our sample 700 megahertz analysis. Would reiterate the conclusion that despite the high reserve prices, a full detailed business case needs to be built, and it's not a one-size-fits-all answer. Value accretion would be different for different operators in different circles, and only a detailed business case would be able to give that answer. To wrap up, we do have a qualitative view on what the potential new entrant, specifically RTO strategy, could be for the upcoming auction, given its sharing tax with RCOM and potentially with the RCOM MTS Aircel merged entity. Our high-level view really is that for RGO, 700 will make lesser sense, and really it could look at it much more selectively in certain circles as compared to various other incumbents, which don't have all that 850 band holding already. So with that, we'd like to wrap up our presentation. We've got about 20 minutes, and then we'd like to open up for Q&A. Okay, first question that's come up: how can upcoming spectrum auctions help make mobile services affordable in India? Well, that's a rather loaded question, Rajesh. Good question. With the high reserve prices, not sure if there's too much room for lowering tariffs, and already tariffs are some of the lowest in the country. So I'm not sure that there's really a need to make mobile services even more affordable. If you look at data, ARMBs, data tariffs, they are already some of the lowest in the world. And from an operator financial health perspective, I don't think upcoming auction or irrespective of upcoming auction, there's too much need to make them even more affordable. Question after that comes around: should the government wait for the ecosystem for 700 megahertz to develop? Do remember, folks, that the ecosystem is developing extremely fast with countries like Japan and some of the other Southeast Asian countries, as well as LATAM and other economies putting their weight behind the 700 APT band. There's been rapid development in 700. If it goes for auction right now, deployment only happens in a year, 2 years down the line, and by that time, really, ecosystem would have developed quite significantly. We see mass adoption of 700 post-network rollout around the 2017-2018 timeframe, and by that time, we don't see ecosystem being a problem. And do remember, it's a 20-year license, so there is a significant juice in the license from a time perspective to get value creation. And all of the analysis we do, there is a lot of mathematical ecosystem development work that we consider in the background in our models, and all of that has been considered in the sample analysis that was presented. What are your assumptions around ARMB that are used to calculate 700 megahertz? What are your assumptions around data penetration? Daniel, that's a little difficult to comment on. Those are slightly proprietary things that we build into models. These have been, these assumptions are informed from winning bids that we've done in India and abroad. If you have specific requirements for those inputs, happy to take that offline. Why you have not showed Jinnon in earlier slides? Why have you considered their direct bidding in next round? Sorry, so we didn't show Uninol.
Earlier slides mean 3G and 4G spectrum strategy slides?
Well, that's a sample qualitative thing. We obviously do have a full-fledged analysis on the regional operator that's in question. So your second question is, why have you considered their direct bidding in next round? That's just one of the options that we have evaluated, Anup. So in that sense, those are one of the 4 options that we have evaluated, because every option needs to be evaluated to see what's the best way forward. And we clearly say that that's probably not the recommended option for the small regional operator. Okay, the next question is for large incumbent who already has LT. Will the OPEX increase not be incremental? OPEX increase will be incremental, Raghavan, and actually that's what's been modeled. So not sure what chart you're referring to. Again, happy to get into greater detail on the specific business case offline. But to answer your question, OPEX increase has been modeled just as incremental if an operator already has 1800 megahertz. Next question is from Vivek Jaiswal. In arriving at ED accretion across all scenarios, revenue upside is the biggest driver. How have we arrived at the revenue forecast and how realistic it is? Honestly, it's very, very realistic. It's I've personally done over 30 auctions in the last couple of years across countries, including India. I've been involved with every auction in India. Our valuation for various brands when we advise operators has really been on the money and has been within 5 to 10% of the closing price that the brand has closed at in the auction. So it's very, very realistic. How has the revenue upside been calculated? We have a slide on that earlier in the deck, where revenue upside comes from 1, market share gains due to lower bands, better propagation, and inbuilding coverage characteristics, and 2, greater data usage on a specific band and on a 2-band LTE. And then we have detailed benchmarks from live networks on that, and that's what really drives the revenue upside calculation. Revenue earned through Spectrum auctions collected over a period of time or in one shot. Manjunath, it's obviously collected over a period of time, and it's a DCF model which takes the full P&L, including revenue upside over the 20 years duration of the license, and does a DCF model to basically do a time value on that over 20 years to an NPV basis. Okay, let me pause here and see if the Economic Times team has specific comments or questions. Next question is from Anoop again. We observe challenges in voice quality or data peak bandwidth availability across a wider coverage area, especially in and around the bigger metros. Do you believe acquiring additional spectrum would help an operator to improve its quality and minimum assurance of services, both voice and data in any way? Absolutely, Anoop, it would. All of that has actually been factored in. As I said, these are very pertinent questions. Happy to share specific details around this and how this is being modeled out into the spectrum value offline. My email is obviously rohan.dhamija@analysysmason.com. I'm sure the Economic Times team could share it, so please feel free to take this offline. Next question comes from Raghavan again around the impact of LAA. Sorry, LAA is an acronym for Raghavan. I'm not sure.
Does it mean LT Advanced? I'm not sure.
Are you talking about LT Advanced? Probably move on to the next one. Apologize. Tushar Dua asked the question on revenue upside. When you say data characteristics, do you also consider VoLTE as part of revenue calculations? Yes, VoLTE has been incorporated in this analysis, Tushar. Next question comes from Daniel. What if one or more operators win 700 megahertz? What happens to RMS gains? All of that has already been taken into account, Daniel. We have a very sophisticated algorithm that actually throws out which operator is most likely to bid and at what value for 700. So really we take into account how many operators will bid for 700 and win 700 in a specific circle, and RMS gains are calculated and forecasted post that. Raghavan comes back again and sure, so LAA, you're talking about LT on unlicensed. You're basically talking about LTEU. Yes, that's been taken into account while doing the analysis. Active brand sharing adds another dimension. That's already been taken into account. Anoop comes in with a very valid comment saying that government seems to be supporting consolidation as well. That's true, Anoop. It is a capital market play. It is a free markets play. It is a survival of the fittest. Will that impact call rates? Potentially it might, and that's not the worst thing, because as I said, rates are already at the lowest. We don't see rates going up too much, whether voice or data, because competitive intensity, especially from the new entrant, will keep them stable or potentially even push them down. So I don't think consolidation is a bad thing in free markets, especially where given how many operators already exist in India. It's good both for the financial health of remaining operators as well as in the long term for customers. Raghavan addresses the question around TV white space ban. That's very pertinent, Raghavan, but we'll request that we take that offline as that becomes a little complicated and a slightly tangential topic. We've done a lot of work around TV white space and happy to discuss that offline. Daniel puts in a question around what percent of 700 megahertz will be sold in our analysis. Daniel, it's hard to say at a pan-India level. That number is quite different for various circles. Sorry, we haven't calculated that. It'll be a simple sum up that we have to do, but we don't have a number at the top of my head around how much overall will the auction fetch for the government in terms of 700 being sold. Okay. Next question from Sachin Sachdeva. Question is around, have we analyzed viability for operators to acquire 700 megahertz? Sorry, that's a statement. Yes, we have, of course. However, what about the operator's capability given already stretched balance sheets? Sachin, we haven't discussed that in this presentation, but obviously that gets taken into account when we do our spectrum strategy for operators. So yes, that always gets taken into account when coming up with a spectrum acquisition recommendation, and that has been taken into account. Manjunath asks a related question around whether banks will play a big role given high prices for 700. Yes, of course, they always will. Sudhi asks the question around another new entrant potentially coming into the market given high reserve prices.
Hello?
Absolutely not. We've spoken to a lot of operators looking at the Indian market closely, and I don't think a new entrant would come in over and beyond Reliance Jio coming in. Okay, folks, with that, why don't I hand it over to the Economic Times team and check if there are any questions or comments from their end.
Thank you.
Thank you.